Yeah, there, Scott. Shares of IBM kind of fluctuating. We're in the green, now in the red, down about 0.5%. The company had a beat on the top line. Profits were in line with estimates at $3.60 a share. Spoke to the CFO about some of these results. Software, the company gets about 40% of revenue. That beat estimates. He said there was actually surging demand going into December for Michigan critical software like Red Hat that saw revenues increase by 10%. Consulting, just about a third of revenue in line. Also said there was surging demand going into December. Very different story than when we heard from Microsoft. And speaking of Microsoft in the cloud, I asked the CFO about competing with Microsoft after its OpenAI investment. He said, in part, we're looking at both organic investment and innovation, but also inorganic plays that can extend our capabilities. I asked him directly, does that mean that they're looking at M&A? He said, absolutely. IBM also guiding for mid-single-digit revenue growth for the next fiscal year in constant currency. So that's not comparable. Now shares of IBM up 0.5%. Scott, back over to you.
All right. Yep, Frank, hear back from you, if necessary as well. Frank Holland with the latest on IBM. Steph, I go to you. This is one of the big ones that you were waiting for. A stock, by the way, that outperformed the market last year and outperformed almost all of tech.
Yeah, really, it was a great year last year because they delivered finally. I think this is very solid. I think the guidance of mid-single digits is exactly in line with expectations, but there were some people, notably 2 downgrades this week alone, that talked about how that actually might come down a bit. So mid-single digits is good. And by the way, the currency hit is going to go from a hit to a tailwind, so that's good for this year. But I look at the fundamentals. Software up 8%, consulting up 9%, infrastructure up 7%. All three beat. And the software line certainly was very, as Frank mentioned, it was a very important piece because of what we got from Microsoft last night. So I think they're taking share. I think Red Hat is absolutely taking share. I think they're delivering, they're executing. The stock is very cheap with a good dividend yield. So if it is weak for whatever reason, I'm a buyer.
Josh Brown, these two reports thus far do nothing to upset that better than feared narrative, right?
Yeah. So IBM, it's important just because it's a bellwether. Statistically, it's not terribly important. I don't think there are really big knock-on effects for a lot of other major stocks, more important than that. But in addition to them executing, and Stephanie is exactly right on this name, they have a lot of the characteristics that investors are looking for anyway. So all they have to do is not screw up. It's a 4.6% dividend yield. It's about a 15 forward multiple. And most importantly, it's a stable business. You might not be excited about it, but if they're executing and they're delivering that mid to high single digits growth, that's really all that's being asked of them from the existing shareholder base. So for that reason, I think this is the type of name that continues to remain in favor.